Have you ever wondered how a mortgage works? What type of interest rate is best for you? Or if it's worth it to make extra payments? In this video, we're going to break down everything you need to know about mortgages, types, tips, and the best tricks so you don't get tricked by any bank. If you're thinking about buying a house or just want to understand this topic better, stick with me. What is a mortgage? Let's start with the basics. A mortgage is a loan you get from the bank to buy a property, like a house or an apartment. Unlike other loans, here the property is the guarantee of payment. If you stop paying, the bank takes the house. This is usually not a problem because property values tend to go up. However, as happened in the housing crisis of 2008, if prices go down, you could lose your house and still owe money to the bank. 4 keys to getting a mortgage. 1. Loan amount. First, you have to decide how much money you need and how much you can put down. You'll usually have to put down at least 20% of the property's value as a down payment. Also, don't forget the additional costs, notary fees, taxes, furnishing the house, and so on. Trick. If an appraiser values the house above the purchase price, the bank might be willing to lend you more money. Types of mortgages. Here are 3 main options. Fixed rate mortgage. The interest rate is fixed and doesn't change. It's perfect if interest rates are low because you'll always know how much you'll pay. For example, ideal in years like 2020 or 2021. Then, there's the variable rate mortgage. The interest rate depends on the Euribor in Europe. If the Euribor goes up, you'll pay more. If it goes down, you'll pay less. It's ideal if interest rates are high, but there are forecasts that they will go down. And finally, we have the mixed rate mortgage. It starts with a fixed rate for a few years and then switches to a variable rate. It combines the best of both worlds and is useful in times of economic uncertainty. Trick. If rates are high, you can start with a variable rate mortgage and when they go down, renegotiate it to a fixed rate. Interest rate. This is one of the most negotiable points. Compare offers from several banks or use an online platform to find the best terms. Banks often offer interest rate discounts if you sign up for other services, such as insurance or direct deposit for your paycheck. Do your calculations to see if it's really worth it for you. The time it takes to repay your mortgage directly affects how much you'll pay in interest. In Spain, mortgages usually follow the French model, where at the beginning you pay more interest than principal. For example, if you borrow 160,000 euros at 2% fixed for 30 years, you will have paid a total of 212,901 euros at the end. However, in the first month, most of your payment will be interest, while at the end, almost all of it will be principal repayment. A trick. If you receive extra money, it's better to make extra payments at the beginning of the loan, when you're paying the most interest. Is it a good idea to make extra mortgage payments? It depends. To decide, consider 2 factors. What return can you get if you invest that money instead of paying down the mortgage? How much would you save in interest if you make extra payments? A practical example. If you have a mortgage at 2% and you can invest your money with a return of 6%, it is better to invest. On the contrary, if your money is sitting in the bank, making extra payments might be the best option. Inflation and your mortgage. Another important factor is inflation. If inflation rises 3% per year and your interest rate is 2%, technically you are gaining 1% because your debt loses value over time. This makes mortgages attractive in high inflation environments. Conclusion. As you can see, choosing and managing a mortgage is not complicated if you understand the basics and apply some strategic tricks. Compare options and negotiate the terms with the bank. Assess whether a fixed, variable, or mixed mortgage suits you best depending on the economic context. Calculate whether making extra payments saves you money, or if it's better to invest that money in something else. I hope this video has cleared up any doubts and helps you make better financial decisions in the future. If you liked it, give it a thumbs up and subscribe to Memorias Tiburon for more content like this. See you next time.